Okay, so this video lecture is about our module 4. This is entitled The Revenue Cycle. So for the learning outcomes at the end of this module, you will be able to understand the fundamental task that is being performed in the revenue cycle regardless of the technology that is in place, identify the functional departments, and trace the flow of revenue transactions through the organization, specify the documents, journals, and accounts that provide audit trail, and understand the risk associated with the revenue cycle and recognize the controls to reduce these risks. So for the content, we will be discussing about the conceptual system and the physical systems of our revenue cycle. So to start with, let us start with the conceptual system. So basically, the revenue cycle, this will be examined conceptually, meaning we will be using the data flow diagrams, okay, in examining this cycle. So this will serve as a guide to trace the sequence of the activities through the three processes that constitute our revenue cycle. For most, this is for the retail, wholesale, and even for manufacturing organizations. So these are our sales, order procedures, sales returns, and cash procedures. So basically, these are the three main activities and processes under our revenue cycle. So again, this includes your sales order, sales return, and the cash receipts procedures. So the task described herein may be performed manually or even by using a computer. So conceptual system means we will focus on what needs to be done. Okay, so that's how usually revenue cycle is evaluated or examined. So the revenue transactions are divided into two phases. So we have the physical phase. Of course, this involves the transfer of asset or services from the seller to the buyer. And the second is the financial phase, which involves the receipt of cash by the seller in payment of the accounts receivable by the buyer. So the revenue cycle consists of two major subsystems. We have the sales order processing and the cash receipts. Okay, so basically this is what your revenue cycle will look like in an illustration. So of course, it will begin with the sales order coming from the customer, and then if allowed, if the transaction or the buyer qualifies for credit, then they will be allowed to avail of it plus the customer service in case they might need additional assistance. Next, after the processing of the order and the credit approval, then the inventory will be ready for pickup for shipping to the customer. So along with that is the billing, and then of course the accounts receivable will be established, and from there it will be recorded in the books of the entity. And of course, the payment, okay, of the buyer to satisfy or to meet their obligation or their credit to the entity. Okay, and then the cycle will go on once the customer will once again place an order, and so on. Okay, so this is how it is under our revenue cycle. Okay, so that's why in this case it is divided into two phases. We have the physical activities. This is the transfer of goods from the seller to the buyer, and the financial phase, which is the payment of the buyer, okay, to their accounts to the seller. Okay, so we have here the pertinent journal entries related to the transaction. So here the journal voucher and entries for the billing department. So this is when the the transaction will be started to be recorded. Okay, so here we will debit receivables and credit our sales. Okay, meaning if there is already billing, then the transaction was processed and was authorized. Okay, so therefore there is already shipment. The transfer of goods was already to the buyer. Okay, so meaning in this case, the buyer will have now the liability for those goods that was transferred to them. That's why in this case, the entity can now recognize that they have the receivable from the buyer. So that's why we have this entry. So debit accounts receivable, credit to sales. For inventory control department, so this is what they will record also. So in this case, this is in the case of an entity using the perpetual inventory system, because if you could notice, the second entry for the inventory control, it recognizes the cost of goods sold and the decrease of the inventory because of the sale. Okay, and of course, our next entry will be during the receipt of the payment of the buyer. So we will debit cash and credit to accounts receivable. So those are the pertinent journal entries related to our revenue cycle. For the revenue database, so we have the master file. So this is where customer files, accounts receivable master file, and master or merchandise inventory master file are being kept. The next is transaction and open document files. So this may be this includes our sales order file, open sales order transaction file, sales invoice, meaning all the other source documents, okay, and related documents to the transactions will be kept. Other files, okay, shipping and price data preference, credit reference file, salesperson file, and so on, sales history, cash receipts history file, accounts receivable reports file, and so on. So these are some of the database or the information, the source documents that are needed for the revenue cycle. So it should be kept. Okay, so this will also serve as an audit trail later on in determining whether such a transaction was approved and authorized. Okay, so we have here an example of the data flow diagram, okay, of a sales order process. Okay, so here okay, so basically this data flow diagram illustrates how the sales order process takes place in the entity. So for example, in this diagram, we will start from the customer. So they will be placing the order. Okay, so here the entity will receive the customer's order, and then from there they will have their open order file, which includes the receive date and the approved date later on. Okay, and then we also have the stock releases for in terms of the inventory later on that will be shipped to the customer. Okay, and then after which, if the transaction was authorized, then they will approve, okay, the sales order, and then the entity's employee will update the stock record, okay, the product and the quantity. Okay, so before it could be shipped, then it should first be verified, okay, before the shipment, and it should go through the shipping log. So in this case, this is if the customer will pay immediately the cash. But if in cases of a credit sales, then before a sales order can be processed, it should go through the sales order, or to check the credit status of the customer if they will be approved or not. Okay, so if they will be approved, then the credit records will be updated. Okay, and then after that, uh, the the order will be prepared, and then the shipment will be ready. And once the transfer of the goods was completed to the buyer, then it will now be the time to record the accounts receivable, to update the subsidiary ledger, post to the general journal or ledger, I mean, and then update inventory records. Okay, and until such time that the customer will pay, so we will update all these documents again. Okay, so this is just an example of the data flow diagram for a sales order process. So again, depending on the transaction or how the process will take place in an entity, so they can design their own process, okay, for this type of transaction. Okay, so you can also have the sales order process flow chart. Okay, so from the sales to the credit to the billing to the warehouse to the shipping. So all these pertinent, so it cannot be seen actually in the screen. Okay, but of course, in this illustration right here, it will be start, or this transaction will start from the customer, and then the corresponding documents like file copy of the customer's order will be filed and processed throughout uh, the different department, okay, until the transaction or the sales will be perfected and there is already transfer of ownership from the seller to the buyer. So we also have here the sales order process. Actually, this is, I think, the continuation of this first uh, flow process flow chart. Okay, so you can have, meaning in this case, you can present your sales order process using the data flow diagram or using a process flow chart. Okay, so depending on how you present it. So those are just the examples. Okay, so I think we will discuss the next this topic about manual sales processing in the next video lecture.